Good afternoon. In this video, I would like to demonstrate in a bit more detail how these two strategies work together and how, at the moment, they are among the most effectively disguised arbitrage strategies available. On the left, I've got the Phantom Drift window open, the drift strategy, and on the right, I have the hybrid masking strategy window opened as well. What exactly does Phantom Drift do? Phantom Drift opens orders, at the beginning imitating the way the martingale strategy typically works. The number of orders that the martingale strategy is able to open is limited. And here we can see that the initial series of orders has passed and Phantom Drift has taken profit by using the martingale strategy. If the martingale enters a loss, then after several unsuccessful attempts, the number of unsuccessful attempts can be configured typically around 4 to 5. The strategy will terminate the martingale cycle and recover the losses, moving slightly into profit by operating as an arbitrage-based strategy. As you can see, this is what happened. It opened an order in profit, then it opened an order with a loss, and after that it increased the LOD and took profit, and then it also took profit on the next order as well. This system therefore enables the broker to believe that you are a relatively inexperienced trader and that you are using a martingale strategy. And they do not pay quite as close attention to you. It also tends to confuse the plugins, and we have now set it up and launched it. But after it has been running for a short while, we will test it in the same way that a broker would test this strategy, using all modern artificial intelligence methods, and we will show you that it is not identified by the broker as latency arbitrage. On the right hand side you can see a strategy called hybrid masking. It also introduces a bit of additional noise into the overall order flow and opens orders by using a range of several different methods. We use several different filters together with the very same instruments. With practically the very same lot size. This creates an additional clearly non-arbitrage based order flow, which helps to further mask the Phantom Drift strategy even more effectively and efficiently. So this strategy earns us money, and this strategy also disguises that money. Here we can see the closed orders. In principle, it also ended up being profitable, but we are not really counting on it to earn particularly well from the Phantom Drift strategy. Thank you for your attention. In the next video, I will show the results of the work over a few days. And we will analyze how the broker sees it and how the broker actually assesses the performance of these two strategies. I would also like to mention that we have created a new strategy for trading gold and indices, and it is not an arbitrage strategy. It can be used alongside these two strategies or completely on its own, and it will also add a little more noise to the overall flow. If we use them together, then of course we can increase our profit because we are trading the masked Lieutenant Arbitrage Phantom Drift, and in addition we trade gold as well, creating extra noise, making the flow look more natural and making it entirely indistinguishable from arbitrage. Thank you for your attention. Please subscribe to our YouTube channel. We will share even more interesting insights and make many interesting videos about how strategies are disguised, how the broker sees it, what you should be aiming for, and how you should work in practice.